Hello and welcome to the Federal News Sense. I'm Srinivasan. The National Herald case is grabbing the headlines on a daily basis. Since June 13, the Enforcement Directorate has been interrogating Congress leader Rahul Gandhi in the case, forcing the usually laid back party leaders hit the streets. Rahul's mother Sonia too is likely to appear before the investigators. The Congress party is describing the ED probe as vendetta politics. The ruling BJP, on the other hand, claims that this was a crackdown on corruption and accuse the Gandhis of trying to pressurize the investigating agencies from doing the job. Earlier, in February 2016, the Supreme Court had directed the Gandhis to face criminal proceedings but exempted them from personal appearances. The court also expunged Delhi High Court's remarks that prematurely pinned a criminal intent on the Gandhis. The Enforcement Directorate is probing the Gandhis on allegations of money laundering. While facing the charges in the law court, Sonia and Rahul are simultaneously trying to politically fight it out in the People's Court by calling for a satyagraha. Therefore, the case has now turned into a battle of wits between the Gandhis on the one side and the ruling BJP on the other. Now, before we go further, let's understand the National Herald case. Like many controversies, the story dates back to Jawaharlal Nehru, the favorite whipping boy of the current regime. In 1937, Nehru floated a company called Associated Journals Limited, AJL, with 5,000 freedom fighters as its donors. Therefore, there was no particular owner to that company. Remember, this company was floated a decade before India got its independence. Now, AJL was launched three newspapers in English, Hindi, and Urdu. Nehru was international correspondent for the National Herald, the English paper, which was acting as a mouthpiece of the Congress party. Now, Nehru continued to voice his opinions in the paper even after he became the Prime Minister. His son in law, Feroz Gandhi, was the managing director of AJL between 1946 and 1950. Nehru would have little imagined that decades later, his grandson's wife Sonia and her children Rahul and Priyanka would find themselves embroiled in criminal investigations following a case filed by their Betnova, Subramanian Swamy, and two others. The case involves three entities, all controlled by the Gandhis. Number one is AICC or All India Congress Committee. The second party in this is AJL, the owner of National Herald and other publications. And the third entity is called Young Indian. This is the one which has been launched latest by the family. Swamy and his friends have accused Sonia and Rahul of hatching a criminal conspiracy to defraud the Congress party and AJL by dubiously forming Young Indian Company. What was their objective? He says to misappropriate the assets of AJL, whose worth, according to him, is rupees 5,000 crores. In Swamy's eyes, the Gandhis have, and I quote, committed criminal breach of trust reposed in the Congress party as well as AJL and its shareholder, unquote. Now, you might ask why Swamy is interested in the affairs of the Congress party. Why is he bothered about Gandhis breaching the trust of their supporters reposed on them? Congress party too raised the issue in the court, saying that Swamy and his friends have no locus standi or right to appear on the issue. But that was rejected by the court, saying that public money was involved. So, as per Swamy, here is how the Gandhi family went about hatching the conspiracy. AJL had closed printing National Herald in 2008. It was left with no money and owed a debt of rupees 90 crores to the Congress party. The debt was sum of interest-free loans extended by Congress to AJL from time to time so that the newspaper could pay salaries to its employees and continue its operations. The allegation here was that the Gandhis had no real interest in the newspaper and they were actually eyeing AJL's real assets. So, in November 2010, they floated a company called Young Indian and bought out an outstanding loan from AICC by merely paying rupees 50 lakhs. That's right. They bought a rupees 50 crore debt for rupees 50 lakhs. The debt which AJ loaned to Congress party now stood transferred to Young Indian. So what did AJL do in turn? A month later, in December 2010, AJL increased its share equity by allotting large chunk of its share to Young Indian. Thus, AJL became a company whose majority shares were with Young Indian. It is not as if Young Indian was flush with funds. In fact, it had none. To acquire AJL, it borrowed rupees 1 crore loan from a Calcutta-based company called Dotex. Of this, rupees 50 lakh was paid to Congress party to purchase the rupees 90 crore debt. So let me repeat the transaction once again. If you recall, AJL had borrowed rupees 90 crores from Congress. It was in no position to return. Remember, AJL was publishing newspapers such as National Herald. Now, Young Indian paid Congress party rupees 50 lakh. Now, Young Indian was a company which was later floated by the Gandhis in the year 2010, and it paid Congress party, who had given loan to AJL rupees 50 lakh and got transferred the debt of rupees 90 crore to its books. In turn, AJL allotted its share to Young Indian. So that's how the whole transaction happened. The income tax department raised red flag over the Dotex deal. According to them, Dotex was in the business of providing accommodation entries, which means the company accepted cash and issued check of equivalent amount. In other words, it was a Hawala company. Now, this is stoutly denied by the Gandhis. According to them, it was a RPG group company and they have agreement with them. The company, among other things, manufactures, if you recall, Seat brand automobile tires. Now, meanwhile, the enforcement agencies that have been investigating the case allege that since 2008, AJL was not publishing any newspaper and was only collecting rent from its tenants. Therefore, it was a real estate company. So, in their view, actually, since it was not publishing any newspapers, it should be considered as a real estate company. This was denied by the Gandhis, saying that newspaper publication was only temporarily suspended and not closed. The lease agreements allow renting. They give examples how all other newspaper companies were indulging in a similar practice. They also refer to the fact that during freedom struggle, the newspaper was closed now and then it was resumed again. And they gave it as a way of example. The probe agencies are unwilling to believe that Congress party actually extended money to AJL. They said the takeover of AJL was based on fraudulent transaction. I repeat, the investigative agencies feel that the whole transaction between AICC and AJL was fraudulent because the rupees 90 crore loan from AICC to AJL was non-existent. And these are the exact words used by them, non-existent, and was only a paper entry. The loan from Dotex 2 was a simple book entry. Remember, Dotex is a company, which is Calcutta-based company, which gave 1 crore loan to young Indians so that pay 50 lakh and buy debt from AICC. They feel that even that was a simple book entry. The Council for Gandhis have denied all this and said that the payments were made and received monies in checks and records have been submitted to the department for their perusal. If we were to rewind to October 2017, we'll find an income tax order saying that young Indians should pay rupees 249 crore as tax for acquiring AJL assets for a transaction valued at rupees 413 crores. Now, I repeat this. Basically, what income tax authorities have done that they have done a valuation of the transaction, which they valued at rupees 413 crores, and said there has been an escapement of a tax, and therefore rupees 249 crore should be paid by Young Indian as taxes. The Gandhis appealed against this order, saying that there was no transaction which could be taxed. But this was dismissed on March 31st, only this year in 2022, by the Appellate Tribunal of Income Tax. Meanwhile, based on another charge, the Land Development Office of Delhi moved for cancellation of the lease of the Herald House property at Bahadur Shah Zafar Marg, which was once called the Fleet Street of Delhi. This is where all the prominent newspapers had set up their offices. Fortunately for the Gandhis, the lease cancellation order was stayed by the Supreme Court. The case has now traveled back and forth, has been traveling back and forth for over a decade with arguments and counter arguments flying thick and fast. in local courts, high courts, and Supreme Court. Enforcement agencies such as Income Tax and Enforcement Directorate have been probing the case. The Income Tax Appellate Tribunal too has heard the case and passed a judgment, as I told you earlier. And they said that the taxes were due for this agreement between AJL and Young India. Now, to get a better understanding of the issue, I have gleaned out allegations, its responses, arguments, and counter-arguments made in the courts for the two sides. As a caveat, I would like to say that this is only a glimpse of the case and not a comprehensive account of the entire proceedings. Please keep that in mind while going through this video. Most of the charges and responses are taken out of the income tax order that Young Indian passed on Young Indian that runs into nearly 570 pages. Now, the crux of the argument is AJL was once a company owned by 5,000 shareholders. Remember, it was launched in 1937. That time it had apparently 5,000 shareholders, of which only 1,057 are existent today. Following the takeover, now there is only takeover by Young Indian. Now there is only one owner, which is Young Indian. 76% of whose shareholdings are with Sonia Gandhi and Rahul Gandhi. The counsel for the Gandhis have argued that AJL was a Chapter 8 company and Young Indian was a Section 25 company, which means the shareholders in no way can take out assets of the two companies or benefit from its proceeds, issue dividends, or do anything extra. All properties owned by AJL remains under its ownership. The company is a legal entity and shareholders of the company, read Sonia and Rahul, do not own the properties owned by the company. To put it simply, the argument is like this. When you buy shares of a company, it doesn't mean that you, as a shareholder, you can claim any rights over the properties owned by that company. That's the argument being given by the lawyers of Gandhi to income tax authorities. Besides, Section 25 company, which is Young Indian in this case, cannot do anything without the permission of the central government. This is the second point they have raised. Everything is being challenged threadbare in the courts. For instance, the investigating agencies have challenged the Section 8 and Section 25 licenses, tax exemption permits, sequence followed while concluding the deal among the three entities. And this is very important. We will further discuss some of these issues here in the form of charges made with the investigating agencies and their responses by the defendants, that is the family. Let's start. Charge number one. First, let's go to the Congress party. First, the Congress party. The investigators say that the loan of rupees 90.21 crore, which AICC says it had given to AJL to run the newspaper business, was non-existent. Repeat, non-existent. Bogus and deliberately created as a step to acquire the shares of AJL by Young Indian. It was not an actual but a paper entry aimed at takeover of AJL. This is the first or the one of the allegations, but I'm listing it as the first allegation. A response to this is the AICC, in its response, has said that it started advancing loans from April 7, 2002 to AJL in fractions, say rupees 2 lakh, 3 lakhs, etc., in fractions of this, and even once they paid rupees 12 crores for meeting AJL's expenses, such as employee salaries, voluntary retirement scheme, payment for provident funds, ESI, and others. Besides, building maintenance charges, etc. All these were paid out of these loan, which was extended to AJL by Congress Party. These were disbursed through checks between the years 2002 and 2011, and all this aggregated, all this added together to become rupees 90.21 crores over the years. This is the reply of the Congress Party. Further, the advocates for the family have pointed out that the annual report of AJL for the year ending March 31st, 2010 shows total unsecured loan of rupees 89.67 crores. The details of lenders were on the ledger accounts. This is what the AICC has said, and this is what Young Indian in its response has given it to the charges. Now, charge number two. This is on Young Indian. Investigating agencies have charged Young Indian of hiding its transaction with AJL, as according to them, Young Indian's financial statement for 2010-11 do not state purchase of shares from AJL. I repeat, this is very important. They are saying Young Indians' financial statement for financial year 2010-11 do not state purchase of shares from AJL. The Congress Party, in its response, or in this case, I would rather say legally, Young Indian in its reply, has stated the information was provided in the notes of accounts. As per them, all the transactions of assignment of AICC loans to Young Indian and conversion of loan into equity by AJL were disclosed in the audited financial statement of Young Indian for the year ending 31st March 2011. Now, this is countered by appellate tribunal saying the reply is not satisfactory. The IT authorities would rather believe the assessment officer who says the entire fact of acquisition of shares and the manner in which the whole transaction was made is not mentioned anywhere, and that's his response. And that's what the assessing officer has said, and the appellate has decided to go by that. Now, charge number 3. There was no loan from Dotex. It was a money laundering exercise. Remember, Young Indian had borrowed rupees 1 crore from the Calcutta-based company called Dotex, and it had no money. This charge is related to that. The response is as follows. Dotex is a RPG company. The annual accounts of RPG Life Sciences and CEAT for financial year 2010-11, the balance sheets of Dotex as on March 31st, 2011 are all submitted. This is the response. Charge number 4. The investigating agencies were intrigued and posed this question to the Gandhis. Why would a company give unsecured interest-free loan of rupees 1 crore? There is no reasonable explanation why Dotex did not demand the loan repayment within the stipulated period of 1 year. Apparently, as per the original agreement, the loan was to be returned within a year. Now, responding to this, Young Indian has said that it had made a provision of rupees 1,76,603 as interest to Dotex. It also deposited TDS or tax deducted at source, which they deducted for year ending March 31st, 2011. It had also said that the loan was renewed from time to time and was repaid on April 24, 2015. Now, the tribunal has made a comment on that. I'm just summarizing it. The tribunal, in its order, has asked the assessing officer to review the issue once again. They said, in view of the response, the whole thing should be reviewed again. Charge number 5. If you remember earlier, the investigating agencies have said that the deal between AJL and Young Indian ensured that the latter took over majority of farmers' shares, which was taken over by them. Now the charge is to take over 100% shares of AJL, Mrs. Sonia Gandhi, Rahul Gandhi, and Priyanka Gandhi, basically their family, purchase additional shares through Ratandeep Trust and Janhit Nidhi Trust, so that from majority shareholders, from a huge chunk of shares, they become 100% owners. That's the charge. Reply: Young Indian, in its defense, has said that Ratandeep Trust and Janhit Trust are public trust, and together they hold 33.16% shares in AJL. Janhit acquired 28.16% and Ratan 5.10% shares of AJL in 1950s and 1970s. Rahul Gandhi became trustee only in 2010. Both Rahul and Priyanka had resigned from these trusts in 2013. Hence, none of the Gandhi family members, Sonia, Rahul, or Priyanka, hold any shares in AJL in their individual capacity. This is the response of Young Indian. Charge number 6. The objects of AJL was never recasted before 2016. The allegation was that though the original objective of AJL was publishing, it began to indulge in real estate business, and therefore before takeover by Young Indian, a not-for-profit company, the objectives of the two companies should have been aligned, and that didn't happen. In its reply, Young Indian, in its defense, has said that the Memorandum of Agreement, or MOA, of AJL was amended in 2011 to include the objectives of Young Indian. Further, this was amended in 2016 in such a manner that the profits of AGL cannot be distributed to the shareholder either as a dividend or even in the event of winding up of the company. The tribunal in its ruling had said that the 2011 amendment was of no consequence because till the year 2016, no such activity was carried out by Young Indian through AGL. What it means is basically in these years, Young Indian also didn't do anything. Now, charge number 7. In 2012, Election Commission received a petition seeking derecognition of AICC under EC symbols order, saying that the loan of rupees 90 crores to AGL was violation of its guidelines. This was a petition made to somebody to Election Commission. Now, in its reply, Young Indian has said that in its reply, the Election Commission actually dismissed the whole thing, saying that Section 29B oblique C of the Representation of People Act 1951 provide for the manner in which the political parties may raise funds, and that there is no provision in the Act prescribing the manner in which these parties may use these funds. Charge number 8. AJL allowed around rupees 90 crores to the Congress party and it had no other liability. So, according to Swami, if the assets of AJL were to be liquidated, and then hundreds of shareholders of AJL would have received the money back, sums equivalent to several thousand times the amount invested by them originally. And the Congress party could have got back the loan with interest, which instead of adopting such a transparent course, what the family has done is they have adopted dubious means and misappropriated the entire assets of AJL by gaining effective control over AJL through Young Indian, and thus the original shareholders of AJL as well as the supporters, donors of the Congress party have been cheated by the family. This is the allegation come suggestion given by Subramanian Swami that they had another way of solving this problem. In its reply, the Congress party, and in this case, the Young Indian, the lease or allotment conditions of the properties of the company in Mumbai, Delhi, Panchkula, and Patna, with the exception of Lucknow, clearly showed that these properties or leases are allotments with several restrictive covenants and are therefore not freely marketable properties. Thus, the assumption of this of Swami and other two petitioners that that the reiteration also by offered by the Income Tax Department that the properties could defray the loan liability is incorrect. That's what they're saying. Now, further quoting the deed assignment of the loan by AICC to Young Indian, the lawyers have argued that AICC was satisfied with the objectives for which Young Indian was set up. Therefore, to support these objects and also keeping in mind that AJL was not in a position to repay the loans, it was agreed to assign the loan for rupees 50 lakhs. Besides, though AJL owned real estate properties, it was never the intention of the company to liquidate these assets. These were acquired only for the publication of business. It had no substantial loan, and the reservations of the company were negative of rupees 72.5 crores, and the loan from AICC helped its publication business. Charge number 9. Young Indian didn't had any money to pay even consideration amount of rupees 50 lakhs to Congress party. So this is something akin to say that before you go for a purchase, you need to have money in your pocket and you didn't have any. So to replying to that, Young Indian has said that we entered into an agreement with Dotex on December 24, 2010 for rupees 1 crore, and on the same day we got it in the form of a check. It could not be encashed because Young Indian hadn't opened its bank account. The deed of assignment between AICC and Young Indian was entered into only on December 28, 2010. So it is incorrect that Young Indian entered into an agreement without money. This is what Young Indian is saying. Charge number 10. Young Indian has benefited from the assets of AGL following its takeover. Now it owns all the properties. In fact, the facts and circumstances, when viewed in totality, would indicate that the whole purchase of incorporation of Young Indian was to get hold of the prime properties of AJL. In its reply, Young Indian has said that we haven't acquired any assets of AJL. Young Indian being a Section 25 company, any alleged gain could not be distributed as dividend. Same is the case with AJL, which is a Section 8 company. It can't sell or dispose of its assets with restrictions on its usage. No benefit, money or otherwise, it is received by Young Indian. That's why they're saying this cannot be a transaction between AJL and Young Indian, and therefore the taxation is not right. Secondly, by acquiring shares of a company, a shareholder does not become the owner of the assets of the company. This is the argument we have earlier explained it to you. Now, the tribunal, however, has said that though claims are being made about AJL being a Section 8 company, this permission was not granted by ROC or Registrar of Companies. This is very important. They are saying actually no permission was given to be a Section 8 company to AJL. Charge number 11. The AJL's, the company AJL stopped publishing newspapers since 2008 and they were a real estate company. Response: AJL is not a real estate company. It continues to be in newspaper business. It had only temporarily suspended its publications because of financial difficulties in 2008. In the past also, the company had suspended and later resumed its operations. While providing details of its efforts to restart the paper, Young Indian says that in 2014, it got the name of its web portal registered. It had also sent a letter to Registrar of Newspapers informing its intent to restart the newspapers. 2 years later, in 2016, the website started functioning. In the same year, National Herald got a new editor. It also provided minutes of the meeting where monthly expenditures and other such things were discussed. This is given as a evidence. Besides, the counsel for the family argued that renting a portion of build-up property is a normal practice in newspaper business, and such a renting does not make it a real estate company. Now, the tribunal, in its final order, has said the following, which was issued on March 31st, 2022. The tribunal has said that Young Indian benefited from takeover of AJL. In its words, such benefit constitutes profits and gains of the business within the meaning of Section 28(4) of the Income Tax Act. The benefit is in the form of fair market value of the properties, or rupees 413.41 crore, and therefore it must pay a tax of rupees 249 crores. The tribunal's final order rests, among other things, on two major arguments. One, there was no publication of the paper for 5 years between 2012 and 2017, and therefore exemptions and concessions under Income Tax Act cannot be granted. Secondly, it was a fit case where the theory of lifting the wheel must be applied, which means the courts could disregard a corporate personality and it could look straight to an owner or owners for accountability. In this case, the largest shareholders, Sonia Gandhi and Rahul Gandhi. The case, therefore, is likely to go through its motions before reaching a logical conclusion. That's all I would like to say about this for the moment. Thanks for watching the News Sense. For more such videos, subscribe to the Federal's YouTube channel. Also, get more news and updates from our website, www.thefederal.com. Finally, support our journalism by subscribing to our premium product, which includes, among other things, other benefits, the 8th column. Thank you and bye.